So much buzz over the stimulus and if it will happen before the election. Both sides of Congress working to get something put together. Well, what is our market timing telling us? What should you be doing in your trading account? Let's take a look at what really moves markets. Click the link to watch the entire video. Good afternoon, everyone, and welcome to Trending Thursday here on YouTube Live. My name is Glenn Tompkins, Senior Instructor here at VectorVest. If you can hear me loud and clear, please type hashtag VVNation in the room to let me know that you can hear me live and direct in your earlobe, because that's where I come live to. Well, it's almost your earlobe, but hopefully, there we go. The VV Nations are coming across. Really, Jay? You put a mug in there. Oh, Lord. All right, so there you go. All right, so luckily, gladly, everybody's stepping up. Hang Time said lost $99. Where'd you lose $99 on? How did you get to $99 losing it? What did you do? Sigh. All right, that's my voice emoji. So in case you can't see the picture emoji, that is my voice emoji. Sigh. All right, so at least Hang Time, you learned about options from the summit to help you to learn a better idea of what to do and what not to do. Glad to be here. Glad to have you all here from the summit people who might be brand new here from Trending Thursday from the summit. Welcome to you. A big welcome to you. All of my regular people that are here, welcome to you. Today we have a special guest. His name is Clayton DeBert. He started off day 3, which was yesterday, brought a lot of enthusiasm and excitement to the presentation. He's going to be my guest today, and pretty much what we're going to do today is bring back a recap of what we covered for the last 3 days. If you weren't here for our summit here on YouTube, you missed a great opportunity to hopefully take your investing to the next level. All right, we went through 3 days of information for free. We talked about swing trading, we talked about options, we talked about retirement, and man, it was just a wealth of information. I will give you a link if you want to get a recap of all the videos, or if you want a recap of all of the slides, I'll get that out for you as well. All right, so that's what we're going to primarily cover today, but we're also going to talk about what's going on in the market, because market's direction is the most important thing when investing in the market. And we will also look at some stocks of interest, stocks that are making some news this week. We're going to take a look at those as well. So, but primarily what we'll be doing is talking about what went on in the summit, and that's why Clayton is here. So I'm going to bring Clayton back on here real quick. Clayton, say hi, say a little bit about yourself before we get started.
VV Nation, how you guys doing today? Hopefully everybody's good out there, and I know I had an excellent time at the summit yesterday and watching it both Monday and Tuesday as well. Hopefully you guys did. Hopefully you learned something, and we can just move on and grow from there. Thanks for having me on today, Glenn.
You got it, man. Always want to support all of our content here on YouTube. If you haven't already subscribed to our channel, please do so. Hit the subscribe button right below the video. And if you like the content that you see today, don't forget to hit the like button. All right. So what do we always start off with? We always start off with what's going on in the market and how to trade this market. The interesting thing about what's going on in the market is that the market is news-driven. That it's primarily based off what's going on with the stimulus package. Is there going to be one? Is there not going to be one? And it's going back and forth. I don't usually like to talk politics in here, politics or religion, except for I'm a Christian. Other than that, that's all the religion we're going to talk about. And from the standpoint of the House of Representatives, Nancy Pelosi put out 2 days to get a stimulus bill passed. The Senate came back and put out another. So back and forth. And I think that a lot of people feel that it's important that it gets done prior to the election, but we will see. So from this homepage, we're going to take a look. Let me see. Is this the right one I want, Joey?
Do you have another homepage?
No, where's the one that they see? This is the one I'm looking for.
Yeah, but there's no Clayton there.
Okay, then I don't want that one. So we're going to look at this one. And we can see that the market today, and we look at all of the major indices along with our VectorVest Composite. The Dow turned up positive now, up 155 points. NASDAQ is up 0.2%. S&P is up about 0.5%. Notice the biggest mover today is the VectorVest Composite, up 0.6%. For those of you who are new and are looking at, wait a minute, did he say time the market? Yes. We time the market. Now, we don't predict which way the market is going to go. We follow the trend of the market, and we keep our subscribers on the right side of the trend. So our VectorVest Composite, which looks at the movement of 8,365 stocks, is what we use to time the market. Well, Glenn, what about the Dow 30? Well, the Dow tracks 30 stocks. The NASDAQ tracks about 4,300 stocks, but they're very tech-driven. The S&P 5 and 100 track 5 and 100 stocks. Respectively. Notice if you add up all of the stocks of the major indices, we still track more stocks than those major indices that we normally use to see if the market is up or down collectively. We track over 8,300 stocks, 8,365 stocks to be exact. We watch the movement of the price of that composite on both the day-over-day and a week-over-week basis to track its trend. So currently, our VectorVest Composite is up 0.6%, trading right now at that index arithmetic price of $52.17. Now, for those of you who are new, tying into market timing as well, we have a color guard. The color guard tracks 3 of our market timing indicators, starting off with the price of the VectorVest Composite, which is the price box. We have RT, which stands for relative timing. This is cast on a scale between 0 and 2. Relative timing looks at the short-term price trend of the market. On that scale between 0 and 2, if RT is above 1, the market's in an uptrend. If RT is below 1, market's in a downtrend. Currently, it's at 0.98. We also track the BSR, or buy-to-sell ratio. We look at all of the stocks in the software that have buy, sell, or hold recommendations. We look at the specific relationship of buy recommendations divided by sell recommendations. With a buy-to-sell ratio below the value of 1, we have a little bit more sells in the system than buys. The market is still showing signs of weakness. So it's not about us predicting where the market is going to go. We track the trends of the market to keep you guys on the right side of the trend, no matter what the market is doing. So from that perspective, we use the color guard like a traffic light. There's a lot of yellow lights in the color guard. Whether you're bullish or you're bearish, you do so with caution. That's what that's telling you right in a nutshell. No ifs, no ands, or buts. This is a great way for you to learn to manage your existing positions, no matter if you're bullish or bearish. All right, and from that perspective, before I go move on to the graph, hey, Clayton, is there anything else you want to add? As a matter of fact, before Clayton got to be where he is right now, he used to be a database manager. So he's really in tune with how we do what we do in the background to make the software work. So, Clayton, any insight in regards to what's going on in the market right now?
No, Glenn, I've been at VectorVest for a little over 8 years now. And like you just said, I came from the data department. So I definitely know what these numbers mean. I can look at them. I feel comfortable, especially looking at this homepage here and all the different indicators. But I just want to point out, if you're looking at this for maybe the first time, maybe you are coming in from the summit, you're seeing this program right now, you got wheels spinning over there in RT, you got a bunch of different green, red numbers, everything's ticking. It can be a little bit maybe overwhelming. And you might say, well, what's he really looking at? All the indices are up. Maybe it's a perfect up day. But then you got the color guard over there and the market timing graph. And just to point out the simplicity of the color guard and market timing graph, read it like a stoplight. We're 3 ticks into the yellow right now. It's right on the yellow. Don't worry too much about the trend being a down-up trend or anything right now. But if this is your very first time, if you're brand new, we got 3 yellow lights, and use caution. You can read it right above there. Well, it doesn't say VectorVest advocates caution, but we got a yellow light right now. Caution in the market, moving forward. And very simple to read a traffic light and read the lights like that. And that's probably where you should be starting and the first thing you should look at when looking at this homepage.
All right. So now I'm going to bring up a graph of the market. Here is our market timing graph, which looks at that VectorVest Composite that tracks over 8,300 stocks. We're now looking at it in candlesticks. Because we track as many stocks as we do, we feel that this is really a better representation of the broad market move. I am going to do a couple of things. I'm going to put this into a 3-month graph. I'm going to tell you about what I've got going on. One, I've got support and resistance lines. This helps me to understand where the market is moving in accordance to current support and current resistance. Notice that coming off of this high here on 1014, it created a new 3-month level of resistance. What's the market doing? Falling past through it. Today is an up day, a nice up candle, very little wick at the top. That's a good thing. But just as Clayton said, is this the right time to go full bore and buy? Remember, we have an indicator called RT, relative timing. It looks at the short-term price trend of the market. When RT is above 1 or when RT is rising, that's a good time to be long in the market. Notice as the market is falling, RT is currently below 1. With today's activity, it's charging back towards 1, but not back above 1 yet. So in our jockey club this morning, I did pull the trigger on 2 long positions, and that was only because today was an up day, so I was a little bit more aggressive. If I'm looking to be more confirmation, I'd really like to use the VectorVest software to show me when the market's in an uptrend. I'm looking at the buy to sell ratio that looks at the overall health of the market. And as I look at that, I'm looking at having it go back above 1. That would show that we have more buy recommendations in the software than sells. So from a market timing perspective, yes, today is an up day. What's the market doing? Coming off of this high, once again on 1014, the market is hitting lower highs. Now, it's also starting to level out right now as well at about a level, just below a level, which is now current another level of resistance at 52.36. With all of that yellow in the color guard, this is a good time to just be cautious in the trades, just like Clayton said. Look at that color guard, use it like a traffic light. It does make life a little easier. So that's where we stand as far as our market timing. I'm not going to tell you not to buy. I'm not going to tell you if you're playing the market bearishly to the downside, you know something, let your stops manage your trades. I'm not going to tell you to get out of them. Let your stops manage your trades. That way, no matter what the market does, you plan your trade, you trade your plan. Trade your plan. Don't trade your emotion, what you think is going on. Trade your plan. All right, so with that, let's go into the first story of why the market is doing what it's doing, all right? So I'm going to go down here, click on my first story, and one of the first things that you always look at is big news that comes out every Thursday, weekly jobless claims. All right, jobless claims dropped to the lowest level since the pandemic started in March. That's important because that kind of news helps to overall move the market, all right? If people think that jobless claims are declining, that's a positive note on the market, and the economy could be getting back to, I am so far from saying normalcy. We are so far from a sense of normalcy, but could it be getting reinvigorated? Possibly. First-time claims of unemployment benefits totaled 787,000 last week, the lowest since March 14th. So a lot less people looking for jobs. And you know something, if you look around, and I'm thinking back even up in Ohio where Clayton is, I'm wondering, Clayton, do you have a lot of signs out there for people looking for jobs or people hiring? I know we got them here in North Carolina. There's a lot of folks here looking to hire people. What about up there in Ohio?
Hey, man, I drive to work when it's dark out in the morning. It's a straight shot to work and a straight shot home. So I don't notice too many signs or anything like that as I'm coming in and going home from work. But, I mean, as far as, like, everybody that I talk to, it doesn't seem like anything is too crazy or anything is too hard and going on right now. And, you know, but obviously it is. People are going through hard times, but no, I can't say that I see anything or don't see anything either way.
All right. Just wanted a tidbit of information. All right. So That's one story that could be moving the market. Another one, stimulus. How about Fed's Brainerd, which is a Fed chief, says more spending needed to avoid recovery imbalance. Very interesting story as I read it. A lot of the Fed people, the Fed chiefs, are out there saying we need more stimulus. And that's why Nancy Pelosi and Mnuchin are out there trying to push to determine if we're going to get a stimulus or not. Keep in mind that it is the middle class that spurs up the economy. And if they're hurting, it's going to be a hard time getting the economy reinvigorated. Now, there's two sides of the fence there. Well, if we keep giving out stimulus, if we keep giving out money, people are not going to come back to work. All right, fine. If we don't give them money, they have to come back to work. All right, fine. But if these people are still out of work because the companies haven't reopened, what's to help them? How do they pay their bills? All right, the pandemic happened. These guys and gals lost their jobs, no fault of their own. And while this is going on, until we can get to a real sense of normalcy, in my opinion, they need help. I understand we want to open the country. I'm all for that. All right? I am all for that. But in the meantime, as people in our government are arguing, the people who need the money to put it back into the economy so we can have a good recovery are the ones that are being hurt. So, there's a lot of people on the Fed side saying that we need the money, we need the stimulus in regards to that. So that was the second story. I'm not going to go deeper into that. I just really wanted to look at the headline in regards to that. Stimulus is needed, stimulus is not needed, whatever side of the fence that you sit on. At some point in time, we got to look at American people who are being affected, because if they're not getting the money to pay their bills, they're not also getting the money to put back into the economy. And that's how it works. Joey gets paid. Joey goes and he buys good stuff. He goes to McAllister's and buys a salad. We both go buy a salad. We're putting money back into the economy. Those people who work at McAllister's get paid. They go to Target and they buy new clothes. They put money back in the economy. Target takes that money and they give it to their employees as bonuses. Then they go and they spend. That's the cycle. And if it stops with people not getting stimulus, then if Joey's not getting stimulus and he's out of work, he ain't getting that salad. And then McAllister's ain't getting no business. And then so on and so forth. So it goes down to that. So just keep that in mind. Right, Joey? Yep. There you go. All right. So those are my two stories in regards to news on the markets. I'm going to go back to the software. And this time I'm going to minimize that. This time I'm going to go to another tab. Not that tab either. Joey, where's my tab? Which one do I want? Where is it? Where are you going? Going to the tab, man. Oh, there it is. I want to go to here. It's all Joey's fault. Let's go to the graphs and let's pull up the VVC, which is what we use to time the market. And for those who are not subscribers to the software, how do you get any semblance of trying to look at what's going on in the market? You might look at the SPY or the S&P 500. Let's look at both of those graphs. Now, I put a couple of different moving averages on them. I know that prior to this high that occurred back in October, that the market was in a nice little uptrend. There it is. All right, nice little uptrend. Then what happened? The trend got broken. What's the market doing? It's consolidating. I also have on this graph a 20-day moving average, simple moving average. General rule of thumb, when the price of the VVC is above the moving average, a good time to be in the market. When it breaks down below the moving average, not a good time to be in the market. I'm also going to put on a market timing call. All right, for those of you, the longer-term investors, we have something called the confirmed calls. Notice that when the market fell below that moving average, a few days later, we gave a confirmed down call. That was a good time to be out of the market. Then, as the market went back above the 20-day moving average, we issued an up call here on on October 8th. Look at that. Nicely run up. We haven't gotten it back to a down call just quite yet, but look at the market consolidating. Great way to plan your trades. Now, market's moving sideways, broke through that trend line. Let your stops manage the trades. Let's go look at the S&P 500. Looks a lot the same, right? Remember, though, the S&P 500 only tracks 500 stocks. A lot of the same looking right now, breaking above that 20-day 20-day simple moving average. Even with the market pullback right now, it hasn't breached below that 20-day moving average right now. Thus, the reason why you're capable of just letting your stops manage your trades. There's nothing here full board that says go short just quite yet. Even from our market timing call, there's a couple of calls that are still short right now. But even from a 30,000-foot view, 20-day moving average, price of the SPY and the VVC, neither one of them are below the 20-day. And we are still in a confirmed up call, the slowest, most conservative call we have. Clay, you want to add anything to either one of those graphs?
No, I don't think so, Glenn. I think you hit it pretty well. I mean, obviously, the VectorVest Composite covers a broader range of stocks, as it covers every stock that we track, and the S&P 500 covers 500 stocks. And the similarities between both, if you don't have VectorVest, if you don't use it, this is something that you should be looking at and saying, you know, this isn't just some made-up number that we have either. This is the real deal. This is tracking the market. It tracks it accurately, and we are in a confirmed up. But like Glenn said, you know, we fell back below that trend there, so keep an eye on that. We got 3 yellow lights in the color card right now. Be cautious.
Straightforward. Whether you're a subscriber or not, we're providing you with the information that you need to make decisions.